And it's Friday the 13th, January 2023. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. Well, let's take a look at the markets. Looks like there's no bad luck in these markets. We see oil prices slipped, even though it slipped, still on record for a weekly gain of about 6% on solid signs, demand growth in top crude oil imported China and expectations of less aggressive interest rates rises in the United States spurred demand. Futures had fallen about 33 cents to $83.70 a barrel in early trade, while U.S. WTI crude futures slipped 20 cents, about 0.3% to $78.19 per barrel. Brent has jumped 6.7% so far this week, and WTI up 6.2%, recouping most of last week's losses. Analysts said recent Chinese crude purchases and a pickup in road traffic fuel confidence in a demand recovery in the world's second largest economy following the reopening of its borders and easing of COVID-19 curbs after protests last year. Meanwhile, the United States Energy Information Administration has increased its global oil demand growth forecast for 2023 by 50,000 barrels to 1.05 million barrels per day, bringing total demand to 100 million barrels per day. Total oil demand outlook for 2024 was also estimated at 102 million barrels per day, driven largely by consumption in India and China. Meanwhile, oil prices had rose more than 1%. That was $1 yesterday, after inflation unexpectedly fell in December. And the central bank's deadline for deposit money banks to cease disbursement of the old Naira notes is expected to take place by the close of business today. It's coming ahead of the January 31st deadline for the phasing out of the old higher denominations of Naira notes in the country, following the introduction of redesigned variants of the local currency. However, some reports say many banking halls, as well as automated teller machines, were still dispensing the old notes, while requests for new notes at the counter were turned down for lack of sufficient supply. Meanwhile, CBN has commenced a nationwide enlightenment campaign at major markets, supermarkets, and other public spaces on the redesigned notes and cashless policy. And the Senate is to ramp up efforts to ensure that revenue-generating agencies provide more funds to implement the 2023 budget. During a chat with journalists in Abuja, Senate President Ahmed Lawan explains that revenue-generating agencies must account for every kobo generated, as Nigeria can no longer continue borrowing for budget implementation. He also frowns on the tax waivers regime cost Nigeria about 6 trillion naira in the 2022 fiscal year. Do take a listen.
We have to work hard to improve our revenue generation, collection, because it's not looking too sustainable that we tolerate people, some agencies of government, to misapply or not even declare the revenues they collect. We can't continue with that. So for us in the Senate, we have decided that for the remaining part, we'll continue to engage with our revenue generating agencies until we get better outcomes from them. And this is possible. This is imperative. And also the concessions and the waivers that government has given to some companies and individuals, maybe, we need to review that. We need to work hard to improve on the revenue generation and collection by the MDS and other government agencies. This should be a very, very important matter for the next assembly to continue to deal with, because we just cannot afford to continue borrowing. We should minimize it. I know it's not possible to eliminate it completely, but we should minimize it.
And now to our first conversation. Nigerian fintech companies raised a venture capital funding of about $1.2 billion. That's in 2022, followed by Kenyan fintech, who raised about $1.1 billion. And Egypt coming in third with $820 million. In Lagos alone, about 107 technology startups raised funding to the tune of $750 million in 2022. Well, let's get a sense of what's to come in 2023 with Adebola Omololu, CEO, co-founder, Get Funded Africa. Good morning.
Hi, good morning.
Great to have you, and
Thank you for
happy
having
New
me.
Year.
Same to you.
So quite impressive numbers.
Very
saw,
impressive.
In 2022. How did that fare compared to 2021? Obviously an upgrade.
It's an upgrade, and the research team at Get Funded Africa are telling me that Africa was one of the few continents that actually had an increase in venture capital funding in 2022. Most of the other continents saw a kind of like pullback. Now, for Africa, in a way, there was a slowdown, correctly, but vis-a-vis pretty much everyone else, there was an increase on the African continent. You have to realize that on the African continent, funding for startups has been growing on average about 250% on average on a year-on-year basis. However, last year it grew slower, but unlike others, it actually still grew.
So having a slow pace, and that was like the later part of 2022.
Yeah.
Is that a sign of things to come?
Yes and no, because the beginning of the year, it took off like, a race. Funding the first half of 2022 was at an accelerated pace. However, by the second half of the year, it slowed down, primarily due to the global economic crisis, fears of recession, among several other things. However, 2023 has started off very interestingly. I should say, just yesterday, one of the startups, a Tunisian startup specifically, InstaDeep, run by my friend Karim, they actually sold, their company got purchased, InstaDeep got purchased for almost actually slightly over $700 million. That's just one company, but that gives, it kind of like shows you what's to come. Because essentially, one of the key factors for funding is investors want to make sure that down the line, they can actually exit. And so when InstaDeep exits for over $700 million, it immediately tells people that, hey, Africa is here for business. And this is one of the factors that we think are going to form, what to come in Africa and funding in startups in 2023.
And, I was speaking to my colleague, earlier in 2022, you hear this company, fintech company, this startup raised about $500,000. This one's raising $1 million. So I'm wondering, how easy is it to raise these funds, or how hard is it?
Funding is very, very tough, and it is very difficult, and it also takes time. The reality is that, many people say, hey, they're raising this, they raised this, and all. The thing is, for funding, you actually have to have a good business. So many people come to Get Funded Africa and say, hey, can you help us raise funds? And we, first of all, have to assess that company. And so what we've done instead is to provide tools to actually build that company up, because it is when you build the company that investors actually start coming. So just now I talked about the Tunisian company that was purchased, 100% purchased for over $700 million. Now, the company that purchased them is this vaccine maker, BioNTech. InstaDeep is an AI company, so slightly different industries. However, BioNTech had been part of their investors because they saw that this company could help them in creating their vaccines faster. And so what happens is that you have to be providing a value or a service, or there's something that an investor sees in you that even affects them. And so you have to build your business in order to attract funding. So a lot of companies that have attracted funding, some of them are playing in industries that there's a lot of development required in there, and investors are willing to put their funds in. And some of them, it's really just a question of interest in what solution they're actually providing. And so funding is not easy. You have to develop a lot of things, build up your business, and then by extension, the funding kind of like then comes by virtue of building your business.
Because obviously when, an investor comes to, to fund, your business or help you raise funds, is it every investor you accept, as a startup? Do I just, you want to give me money, I take it, what do the startups, have to look out for to make sure that this is the right, investor, this is the kind of person I should work with or not?
Well, that's a very good question, and it's something that we advise a lot of the startups that we work with. Essentially saying that, look, yes, you need money to grow and all, but it's very important for you as a startup to even select the investors that you want. Many people would come and throw money at you. The reality is that, and I say this with all intent, there are more funds available than even people that want them. There are trillions, and I didn't use the word billions, trillions of dollars available for investment. But that startup needs to be investor ready. Now, it also means that that startup needs to select the right kind of investors that would help to grow their business. It's not just the money you need, you also need the advice. You need the mentorship and the people that would dedicate time in order to grow that business. And so it's very, very important that whatever startup, whatever business you're in, you're actually selecting the right kind of investor from a financial perspective, yes, but also from an advice, mentorship, and all those other small things around it that can actually help the business to grow and develop.
And obviously we have so many people out there looking for funds to start their business. What would you tell, such a person, trying to attract funding, but they can't even get funding at this time?
There are multiple stages. You have different types of businesses. I like to say that in Get Funded Africa, we work with SMEs and startups. A startup is an SME, but the difference is that a startup is a fast-growing SME. Now, a startup means that that business is growing quickly. So it means that investors are more willing to take the risk of putting funds in to that business so that it can grow. The last thing an investor wants is to invest into a company and then, it becomes like The Walking Dead, right? They want to see that consistent growth. And so if a startup or an SME has an idea and they can actually take that idea to the next level, that helps the investor know, hey, look, this company, they've got something going on and we can actually grow and scale. And you see that happening now more and more with specific markets. So you have the top, the top ones and then the outliers. So Nigeria is now, it is Africa's largest economy on one hand, and by extension has attracted the largest amount of funding into Africa as a whole. On average, Nigerian startups attract anything from, over the last 4 years, anything from 20% to about 35% of the funding on the African continent. In 2022, Nigerian startups attracted about 25% of investment into African startups. It was, as you rightly said, the data aligns with the GFA research team of give or take about 1.2. It's still going to be coming in because usually what happens is that the investors would then say, hey, these are the companies that we invested in. So there's a lag time usually of about 30 to 45 days. But what we see is that Nigerian investment into Nigerian startups we expect it to hit about 1.3 to 1.4 billion dollars.
Are we getting more of that funding in Africa just because we're the biggest economy?
It's not just that. It's the fact that, A, we have a huge market and there are many problems. So the more problems
are good.
Exactly.
Yeah.
The more problems you have, side by side with that, is the more opportunities. We talk a lot about fintech companies. And one of the reasons is because the percentage of, there's a huge percentage of unbanked Nigerians. And this is in Nigeria and even across Africa. There's a large number of unbanked people. And the challenge is, of course, for many of the banks, there are specific regulations that they have to follow. And so that bars them or stops them from actually onboarding many people. However, many of the fintechs who are not actually held by some of those regulations or rules are able to actually go out there and onboard people. So what it means is that it's a problem for some people, they don't have bank accounts, But at the same time, it's an opportunity for a fintech, for example, to go out there and get things. And it's not just fintech. There are huge opportunities in the healthcare industry. We saw huge investment in the healthcare industry in 2022, almost 100. So again, even though the general growth rate in 2022 slowed down from an African perspective, still increased. However, if you look at specific industries, there were huge jumps. In the healthcare industry, there was a huge jump in investment. In the AI sector of things, there was a huge jump in investment. And even in ecosystem builders, surprisingly, like Get Funded Africa itself, there was also a huge jump in investment. That grew almost like 280%. So, and in different countries, we have, I started off by saying, okay, you have Nigeria, you have Egypt, you have Kenya, and you have South Africa. Let's call them the tier one, for lack of a better word, let's call them tier one funding destinations. And then you now have another set of destinations that are growing and growing very quickly. So you have countries like Ghana, you have Tanzania, you have Uganda, to mention a few. And then there's some up and coming ones as well, you know, the likes of Botswana and Tunisia as well, that are coming up. And all of this, the entire ecosystem is affected by the concerns of the investors in terms of what's the size of the market, what's the ability to cross-sell into other markets, other things like what's the growth rate, and even regulation. Nigeria passed the startup bill in 2022. Sorry, I worked with it for so long, I'm so used to calling it startup bill.
Right.
Now the Startup Act.
Right.
And now joins countries like Tunisia. And again, you're seeing the effect of what has happened in Tunisia just because of the regulation and the framework that has been created for startup funding and for startup growth. So regulation and government also plays an important part in attracting funding. We have several multilateral institutions across the continent, just across the world actually. Right. The likes of the Dutch KfW in Africa, the Africa Development Bank, who last year came together and committed to over $80 billion over the next 5 years in terms of investment into startups. So when I said that there is more money than startups available.
I'm talking about, you know, more money. You know, I did see that headline earlier. A big, you know, investor kind of like got scammed, you know, by a startup. They kind of played up the number of users, you know, of their platform, and they didn't have any users. So how are you able to, you know, spot such inconsistencies before making an investment?
So this is from the investor side. Many investors take their time to actually understand the business of the startup and actually see what it is that the company does and all. And they do a lot of things based on trust, whilst of course also verifying. It is just the way the system works. Some businesses fail. That is just how it is. And some fail in a spectacular way, where they have been untruthful in terms of building their own business and the numbers and everything that they project. The beauty of it, though, is that the way the venture capital system works, at the end of the day, even those that fudge the numbers will always be exposed. So the fact that, you know, there was a big failure is also a testament to how venture capital works, that ultimately, even if you fudge your numbers in order to get investment, you will be exposed and you will be shown out.
Right. All right. So early days, 2023, quite a big number attracted into Nigeria, talking about $1.2 billion. What are we expecting, you know, for 2023 for Nigeria and Africa? So the tier one.
Yeah. Well, let me talk about Africa as a whole. And so for Nigeria in particular, our analysts project that investment into Nigerian startups this year is going to hit about $2.5 billion. And that investment across the African continent is going to be around the $7 billion mark this year. So a growth from about $5 billion that we see, that the numbers tell us as of 2022, to $7 billion in 2023. And there are several factors that will also affect that. One of them I mentioned earlier, which is the ability, or what investors see as the ability to actually exit. And we're already getting pretty good stories in that direction. The size of the market, as well as regulation. We're seeing a lot of activity from previously docile or quiet organizations that should have been actively investing, but we're seeing more activity. So if you say Nigeria, for example, I want to specifically mention the Nigerian Sovereign Investment Authority. They have started, they even started a prize for innovation, and they have been doing this quietly for a while, but they're now actively investing in African-based funds that are also investing in startups. And we're seeing this now more with several sovereign wealth funds across the continent. The Pula Fund in Botswana, the IFMA Fund in Morocco, and several other countries. Several other sovereign wealth funds are doing so. In addition, remember, investors, typically the way the venture capital industry works is that long-term, people that have long-term funds provide those funds typically for a period of 5 years to 10 years to the venture capital investors, who then take those funds and invest them in the startups, right? And so if you are able to increase the flow into the venture capital companies, by extension, you're able to increase the flow into the startups. Because now we're now seeing that even things like pension funds, in many African countries, you have pension funds, long-term funds. Yeah. And those pension funds typically should be investing in several things and various asset classes. You now have some countries changing their regulations to enable pension funds invest in startups because it is an asset class that typically would grow. There will be some failures, of course.
Right, but 2023 yeah, looks good.
It's starting off on the right note. Okay. It's looking like it's going to grow. All right. Especially for Africa, we're coming from a very low base. Okay. Because if you think about it, even when we say it's going to hit $7 billion, compare that to the US, where it's probably about $200 billion on an annual basis.
The uncertainties that are still ahead, because we're getting all those gloomy forecasts, from the World Bank, IMF, and all of that. But we'll keep watching, we'll keep tracking this. The African funding raises. Thank you so much, Mr. Adebola Mololu, CEO, Get Funded Africa. It was great having you.
Thank you for having
perspective me. Today. Yeah. Thank you so much. All right, talking about investment strategies, that's our next conversation. We've got, so many gloomy economic forecasts for the global economy. We're watching how to invest going into 2023. That's our next conversation. Please stay with us. Welcome back. Now to our next conversation. Well, 2023 is certainly a unique year for Nigeria with the general elections just next month, and macroeconomic vulnerability still not abating. In spite of all of these, the fact that more than 1/3 of the world economy is projected to go into recession, that's according to the IMF. Let's talk to Moshoyi Temitokwe, now Investment Strategy Manager at AfriInvest. Great to have you. Good morning.
Good morning, Laddie. Thank you for having me.
Great to have you. So we did get, a forecast for the Nigerian economy. We did get that 3%, growth forecast, but we got a revised a downgrade, from the World Bank to about 2.9%. So do you think the Nigerian economy can beat these downbeat forecasts, and how?
All right. Thank you once again for that question. Nigeria economy is expected to grow at about 3% this year, where that's quite good on the back of, so many factors that are quite unique to Nigeria, despite, the fact that IMF think, the world economy, like about 2/3 or 1/3 of the world economy will go into recession this year. Nigeria is expected to deliver about 3%. But if you look at the structure of the growth, it seems the Nigerian economy is quite resilient. But then if you look at where we're coming from prior to 2016 and the 2020 economic recession, it's quite obvious that the economy is somewhat resilient. However, the resilience is not so strong. For instance, prior to 2016, the economy was growing at an average of, say, 4-5%. In fact, we saw so at a point it grew by 7 to 8%. So a 3% growth looks very good. That means the fear or the synchronized fear of recessions across economies from advanced market to the emerging market, So that may look so good, but if you drill down to the structure of the growth is somewhat disturbing. For instance, the oil sector has been in recession since 2020. In fact, last year, for the third quarter numbers, oil sector was down by more than 20%. That is quite substantial, right? And non-oil sector has been the major driver of the economy, even though that has been, the major conversation around the Nigerian economy in terms of diversification. But everyone would desire that, economy is all sectors of the economy, is utilized or is optimized to achieve the optimum, growth. For instance, for Nigeria, if we trace back to a period where unemployment was very low. So what I mean by low unemployment, is when unemployment is lower than, say, 10%, the 9% or 8% levels. Economic growth in those periods in Nigeria, was over 6%. So that's from that you could say that the best growth, or what we should be looking at as inclusive growth for Nigeria, is over 5, 6, or 7%. So a 3% growth, is not really inclusive, and it does not show that the Nigeria economy is so resilient. In addition to that, if you look at the structure of the economy by a sector, we have the three broad sectors: agriculture, industry, and services. And if you look at the contribution of each sector to GDP, it's very obvious again that something is happening to Nigerian economy. As a matter of fact, between 2010 to 2014, you would observe clearly that agricultural sector and industry were almost contributing about 25% respectively to GDP. But the trend has changed substantially. Industry sector is contributing less than 20%. Agric is over, agricultural sector is over 25%, and services sector is about 27%. But when you pick top economies, innovative economies, advanced economies, you will observe a unique trend. Industry is usually one of the best contributors. For instance, if you pick China, India, the US, you observe that industry contributes as much as 30-40%, followed by services. Agriculture is usually the last in terms of contribution. So that speaks to one fact, that despite the fact that it seems the Nigerian economy is resilient, the structure of the economy is not so resilient. Right, or I would say that the economy is not strongly resilient, maybe somewhat resilient. So it's also important to mention that, the growth we are seeing, or the growth we saw last year, is quite, that kind of growth was painful. And why I said it was a painful growth is because if you look at inflation above 20%, and output or productivity is expected to, once we have the Q4 number, we expect that growth should average around 2.9 or 3.1%. So compare, economic growth to how, inflation has surged significantly. One could say that the growth we saw in 2022 was a painful growth because it came with, high inflation.
All right, talking about, painful growth, from 2022, this projection now for the Nigerian economy to grow by about 3%, obviously we should be at least close to 5%. But all these numbers, all these projections, how does it affect the common man?
So, for every policy, right? For every policy, both monetary and fiscal policy, they are to focus on macroeconomic objective. Economic growth, the 3% economic growth, like I said, is just one of about 5 key macroeconomic objectives. So if we are achieving, relatively high growth of 3%, and we still have other macroeconomic objectives on the back foot. So other macroeconomic objectives include, full employment, price stability, we talk about favorable balance of payments, and we also look at, fair income distribution in terms of, income inequality. So you agree with me that currently in Nigeria, when we talk about price stability, is off the table because inflation at, over 20%, which means even if growth is 3% and inflation, because across, research outfits, even in AfriInvest, we predict that inflation will remain above 70% on average for 2023. So if inflation is still high and productivity is just about, productivity is measured by GDP, right? So if it's just going to increase by 3%, then the growth will not be felt by, by an average Nigerian. In addition to that, if the labor market is still very weak in terms of employment, nobody will feel the impact, of, the majority of Nigerians won't feel the impact of the growth. So I think we should, in addition to, the relatively high economic growth, attention should be drawn to other macro indicators that directly affect, everyone in Nigeria, which are inflation and employment.
All right. So looking at 2023, obviously we have there are some uncertainties, coming with 2023. But investors at the end of the day need to find a place to put their investment, where to put their money. So what do you say is the playbook, the optimal playbook for 2023?
So 2023, as much as for Nigeria, it comes with a lot of challenges, and is expected to have all of that given the general election and the policy changes that will come on the back of the result of the general election. However, opportunities abound in the financial market. For instance, this year, the U.S. inflation is predicted to decelerate substantially. On the back of that, interest rate, is expected to follow inflationary trend, and looking at what the decision Fed will take. We also expect that to happen in Nigeria. As a matter of fact, if you look at Treasury bill rate, that started to decelerate. So what I mean by that in terms of opportunity is that let's look at the Eurobond market. We know that once yields are rising, what happened? Once yields are falling, I beg your pardon, it affects bond prices positively. So currently, we've been seeing positive momentum in the Eurobond market on the back of expectation that yield will continue to trend lower. So investors may begin to look at the Eurobond market, even though the market is highly capital intensive in terms of what it's required to invest in Eurobond. However, there are also opportunities in mutual funds that are invested in Eurobond. Okay. In addition to that, it could also be positive for the equities market. That once interest rate is going down, it affects valuation positively, particularly financial sector. As a matter of fact, if you look at what happened between December and now, if you look at the Nigerian financial market, you will see major interest in the financial sector stocks, because they will benefit largely from reduction in interest rate as a result of a better margin for them in terms of interest expense. So if you look at what how that will affect the stock market, I think it's really positive for some selected stocks.
All right.
And because if you look at interest rate generally, what you get in fixed income market is getting lower. So retail investors may begin to look at opportunities in the equities market.
All right. Thank you so much, Omochi Temitope, Investment Strategy Manager, AfriInvest. It was great having your perspective. Thank you.
Thank you very much.
And talking about investments, obviously, well, you did mention the Nigeria capital market, but also that Eurobond market, even though it is quite, capital intensive getting that market. But we have Anita now to give us details about yesterday's close on the NGX. And Anita.
Good morning, Ladi.
Good morning.
Thank God it's Friday.
Thank God it's Friday.
Yeah.
Friday the 13th.
And speaking of Friday the 13th, what do you know about Friday the 13th?
Well, what comes to mind is bad luck.
Yeah,
Freddy Krueger.
They call it they call it the unlucky number date.
Exactly.
And then I think there's so many reasons to it, but we will be looking at three markets today.
Right.
Yesterday we had was a lucky one for the
it's been quite lucky this week.
Yeah. So far this week. Yeah. So let's see if it turns out to be unlucky for investors at the close of Friday's trading session, which is the last for this week.
Okay.
Now, so For Nigeria's stock market, Thursday's trading session, this is what it closed. It added an additional 0.62% to what we had previously, 0.55%. Now, in valuation term, that amounts to about 173 or approximately 174 billion naira added. And then we crossed into the 52,000 points level for the all-share index, as you can see on the board there. Equity cap is up 28.349 trillion naira, and that's thanks to the banks. The banks have been making the markets to sustain that rally in the last two trading sessions between Wednesday and Thursday. But at the same time, MTN Nigeria countered the loss that we had from the market's most capitalized equity, which is Airtel Africa. It went down by 0.63%, but MTN gained 2.3%, and that made the market, investors' interest for that equity. Now take a look at the activity chart. Activity chart, sectoral performance, all green across board, particularly on the banking sector counter, like as I mentioned, the tier 1 lenders as well as the tier 2 lenders, they were responsible. They were all in the green, 35 gainers against 9 losers. That's across board for the market. As you can see there, consumer goods 0.74%. And now let's move over to the activity chart. In terms of activity, not too good. Red picture there. Volume down by almost 25%. Value down by 5.32% at 7.72 billion in contrast to what you had on Wednesday. Then for the deals, nearly 6% loss for that for yesterday. Now, for the market, so far we've crossed it. We've had about 1.56% increase year to date, still in the month of January, and it's still a rally for the market. But we will be looking out for how the market closes for today, and then we will be having a closer perspective for the market. Now, before we have our guests, let's take a look at how the fixed income market turned out. It's bearish performance for the fixed income market, particularly on the FGM bonds, as well as the treasuries market and the OMO segment. But now, to give us a closer perspective on that market, let's talk to Samuel Bameke, investment research analyst at Maritime Securities Limited. Samuel, thank you for joining us on our show.
Hi, Anansi. Thank you for having me, and Happy New Year.
Yeah, Happy New Year. First time having you for first month of the year.
The year 2023.
Yes.
Yeah.
Now, my observation, I saw that as of yesterday, Nigerian investors they offloaded their treasury bills holding due to a plunge in spot rates, and then at the same time, average yield on the federal government's bond, there was a spike in it. That's because fund managers they made a slowdown on ramping up fixed income interest. Now, can you tell us more about this market? What's going on? We've seen the equities market sustain its rally so far this month.
All right, thank you for having me. So for the fixed income market, against the general expectations, we've seen slowdown in rates for the treasury bills market coming up from the auction in December, and the auction held this week. We saw rates declining by about 119 basis points on the 364-day instrument. Well, the cause of that is, first, the amount on offer has been really low if you compare to previous times. I mean, the CBN raised about 57 billion. And then if you look at the subscription have been high. We've had high subscription, and that is riding on the liquidity that has been in the system. So the CBN have been riding on that to manage rate and bring it low. And then we've seen investors rotate funds into the secondary TB market, and we've been seeing yields drop on the secondary TB market, just to meet unmet demands that are the primary market auction. Then for the bond yield, at the moment, what we are seeing is investors trying to play from the short end, coming to the short tenor and short-term instrument at the moment. Given the expected rise in yield in general market, investors will try to put their money at the short end so that they can, come out and also reinvest again in the market. So basically, that's what we've been seeing play out in the fixed income market from December up to now. But we are expecting that for the treasury market, that would change, given that at the next auction, the amount on offer is likely to increase, and then we are likely to see probably more pop in system liquidity.
Okay. Now, Samuel, just one word. Still on the market, but the fixed income market and the equities market, they go in correlation. Now, next week, we will be expecting the inflation numbers to be out most likely on Monday. And the equities market, well, still eyes out for the upcoming election. So now, how are all this playing into both sides of the market? What's your expectation for the fixed income market and the equities market? In 1 minute.
So for the equities market, I mean, at the start of the year, you always see that optimism in the market. You see that likely optimism in the market, the January effect in the market, and that's as a result of a lot of rebalancing activities that go on, and portfolio rebalancing activities that go on in January, and then you have, the likely expectation of some corporate action in the market. So at the moment, we are seeing that optimism in the market, and we are expecting that would, continue up until January ending. That optimism will continue. Again, prices are low at the moment. Prices are quite low, and we've seen significant movements in the bellwether tickers. So we're expecting that will continue. While for the fixed income industry, for the fixed income market, we're expecting that investors will continue to demand for higher rate and higher yield. Looking at inflation, because the expectation is that inflation will continue to, be on the uptrend. I mean, the flooding activities that have taken place from last year is going to feed into this year, disrupt agricultural, and production here and there, and also structural issues. And then we still have the issue of imported inflation, which is still going to affect the headline inflation for Nigeria. As a result of that, investors would continue to demand for higher yield to compensate for the negative real return. So that we'll see that play out in the market. But overall, the expectation is that in the fixed income market, we should see yields trend upward, gradually trend upward.
Okay. All right. Thank you, Samuel, for that analysis. And as usual, our eyes will be on the market's performance. So that was Samuel Bameke, investment research analyst at Merisem Securities.
All right. So crystal ball close.
Crystal ball for the market.
Friday 13th.
Yeah, I think NGX. My crystal ball says green. But for the unlisted securities market, it was in the red for a second day.
All right. So we expect good luck for the NGX. All right. Thank you so much.
Market.
Okay, thank you so much, Anita.
Pleasure.
All right, I was Anita there giving us the details for those markets. Now, let's head on quickly now to the UK. Now, we have Juliana standing by in our UK studios now. So, Juliana, good morning. So, the UK economy grew by 0.1% in November, and obviously we did get the drum roll of recession, but it looks like the UK economy is not in recession.
You're absolutely right. Good morning, Laddie. We have had official data from the Office for National Statistics showing surprising information that the UK economy actually grew 0.1% in the month of November, when all economists had forecast that there would be a dip by at least 0.2%. Now, a recession, a technical recession, which is, of course, in the UK, 2 quarters of negative growth. That had been forecast not just by the Bank of England, but also by the Office for Budget Responsibility, the International Monetary Fund, and the World Bank. That hasn't happened, thanks mostly to sport, because in November, if you remember, if you're a sporting fan, Laddie, we had the World Cup. And so we did see lots of pubs and bars up and down this country jam-packed with punters who are spending their money, which helped lift economic spend, but also as well, we had a really good month in the telecommunications sector. There are some alarm bells, and they're coming this morning from the Labour opposition party, as well as business groups, saying, look, it's too soon to kind of change the sentiment and the mood music in the room, because there is data, but then there is reality. And I think the reality tells us that people in this country are holding back. Wages are not going as much. Inflation at double digits. Is this going to last until the rest of the year? But some great news, surprising news out of the Office for National Statistics this morning.
I guess we can say thanks to the World Cup then for that growth.
Yeah.
Let's look at other markets. Now we see the Treasury, UK Treasury is set to make about £3.8 billion in profit from the intervention, by the Bank of England. I guess thanks to the mini budget.
Thanks to Liz Truss's disastrous mini-budget in September, when herself, alongside her Chancellor Kwasi Kwarteng, decided to announce billions of pounds worth of unfunded tax cuts that almost, straight away spooked the markets. That led to an unprecedented move by the Bank of England to decide to buy long-yielded gilts, because it was particularly the bond markets where we saw the biggest sell-off. Now, they purchased about £19 billion worth of government debt at a cost of about £24 billion. What happens to that money? That goes back into the coffers. And so, although it was 6 weeks of, treachery, shall we say, I think that at least Liz Truss has managed to put something back into the taxpayers, piggy bank, which is, a good story at least.
Yeah, thanks to Liz Truss for that one, I guess. All right, Juliana, thank you so much. We'll talk to you at 1:30. Thank you.
Thank you. Thank you.
All right, now let's move on to other markets now. Well, it is Friday the 13th, but I guess the crypto market doing pretty well today. On the back of that positive CPI data we got yesterday for the U.S. in December, and we see the sentiment, 31 points, fear, better than, what we had yesterday, and most of 2022 was going between extreme fear and fear consistently. So now we're seeing some greed might be on the horizon, for this market, talking about sentiment. Let's look at the market cap now. $904 billion, not seen this in a while, 2.08% up, breaking that $800 billion mark there. Volume also big this morning, 22.14%. We see Bitcoin dominance sitting at 40.07%. Let's look at the price of Bitcoin there. A big $18,831, about $1,500 added to the price of Bitcoin just a few days, up 3.89%. Did touch $19,000 in the session there. Volume, big volume this morning, $31.05 billion, showing investors bringing in some buying pressure for Bitcoin. Let's look at Ethereum, not left out of the party, $1,409, up 0.83%. And we see volume also big, $9.81 billion traded in Ethereum this morning. Let's bring in Mary Maswan now, financial market analyst. Hello, Mary. Good morning.
Hi, good morning. How are you doing?
I'm fine. And, obviously the market is looking quite fine too. Bitcoin, altcoins, all rallying on the back of that CPI data we got yesterday. But are there any risks on the horizon? Because obviously 2022 is still very fresh in our minds. We saw those bear market rallies, but they always, fizzled out. How are you seeing it?
Well, you know how it is with digital currencies. It's volatile, so you never know what could happen. But what we do know is that traditionally, after the bear market, which is second year of before the halving, there's always a significant improvement in the price of Bitcoin, which would also affect the other prices of altcoins as well. So that could happen if we do not have any crazy saga like we had with FTX coming up later in the year. Then I guess it will be up from here. So I'm thinking, like I said some time ago, there will be regulations that might affect the price of digital currencies as a whole. But I think it's looking quite positive so far from this angle.
Yeah, quite positive, even though the SEC is putting their eyes on the Winklevoss twins at this time, talking about Genesis. But, it's been a bear market. Obviously, some projects were still building. Are there any projects, that were born in this bear market that are worth watching at this time?
Yeah, there are actually quite a good number of projects that was born during the bear market. We had Machankra that came out early in the middle part of last year. So Machankra is actually a platform that allows users to have access to Bitcoin via USSD, which is first of its kind. So that means people with feature phones can have access to Bitcoin, which is really great. We've seen they've expanded to 9 countries, so 9 African countries so far, and they're expected to expand to more countries. The just concluded Africa Bitcoin conference also unveiled a good number of African-based startups that are working towards helping Africa. Agreement being the winner of the hackathon. So Agreement is actually focused on microeconomic activities in terms of helping in area of agriculture through the use of Bitcoin. We also saw a good number of other projects like LNVPN, which makes it easy for people to have access to VPNs using the Lightning Network by paying for VPN services using the Lightning Network. We had Banksas, which is a Bitcoin exchange platform, which is going to be based in Senegal. We had a good number of them show up. And then also we had existing Bitcoin projects that have expanded their services. We saw the likes of BitNob moving in really big in the area of remittances and opening up remittance solutions for Africa, which is really great. They have big companies have partnered with BitNob to expand their services to Africa, which is amazing. So yeah, we're seeing a lot happen, and I'm sure we're going to see. Yeah.
Yeah. So I'm sure pretty more coming up, but obviously, it's a bear market, and obviously it's not easy, getting these projects because everyone's focused on price action. Well, thank you so much, Mary Masso. I'll be watching out for 2023, watching out for all these projects. Thank you so much.
You're welcome. Thank you too.
All right, now let's quickly flip over to the big gainers, for the 7-day trading week. Now we see top 7-day gainers. Now we see Gala Games there. That's topping the counter there. It's trading at 4 cents right now. It did come up from about 1 cent, so it's up about 120% in 7 days. The biggest gainer this week. That's Gala Games Metaverse token. And we see APT there, $6.28. That's up 70%. And we see Lido Dow also having a rally this week. It's up 53.22%. Up at $1.99, about $2 per token. Then Zilliqa also getting in on the action there, up 44.95%. We saw most of these gains also on the back of the positive CPI data we got from the U.S. Yesterday. Let's look at the top 7-day decliners there. We see Leo, that's the top one there, down 1.19% this week. And TON, that's had a run last year, $2.17. It's down 0.39%. So that's the performance for most. The best performers and the worst performers for 7 days of this week. All right, that's it on the market, and that's a wrap on the program. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch this again, if you want to, on our YouTube channel. Just flip over to YouTube, search for Channels Television, and you can watch all our productions. Thank you so much for watching. I'm Ladi Williams. Enjoy the weekend.